Wall Street is completely sleeping on Salesforce, and they're setting up to be the biggest AI play for 2026, so stick around in this video because we're going to go over why this move is just getting started and where I think price is headed. So let's go. I work full-time and make stock market content on the side, but I'd love to make it my full-time job here soon as you guys continue to support me. I've met with hundreds of buy-side investors over the years identifying high-growth opportunities, and I've worked with a lot of sell-side institutions coming up with price targets and analyst estimates. If that all sounds interesting, hit subscribe and check out the other stock analysis videos on my channel, as these are really designed to level up your investing and trading edge. By far, the biggest theme heading into 2026 is going to be which software company can fully convert into an AI player. As we pull up the top names dominating the sector right now, on the top of your screen, you can see that Microsoft and Oracle have been lagging recently, and I think that's mostly in part because the market is trying to place its bets right now going into year end. More importantly, looking at something like a Palantir, an AppLovin, a Salesforce, and an Adobe at the bottom of the screen there, because those four companies that I just identified are all fighting for their chance to prove to the market that they're able to deploy AI the best, and they're definitely not going to be put out of business. And if you ask me, my money's on Salesforce right now, as they just reported a very strong third quarter results. If we look at their investor presentation, once again, you can see for 7 quarters in a row, they haven't posted a single negative growth rate, and more importantly, I don't see a negative value on this entire chart, so they are not slowing down anytime soon. And the story is about to get really exciting because they just flipped a switch on their fastest growing product ever in Agentforce, which is growing at well over triple digits, and a lot of their customers are eager to integrate with their Agentforce offering, as companies are starting to understand if you have an entire agentic workforce that's able to go out and close multi-million-dollar deals just on their own, that's going to be a massive cheat code for anybody who's able to get that rolling first. And there's only one player in the entire stock market offering that solution, which is ticker symbol CRM. And another very encouraging sign is their continued emphasis on deploying all of the capital that they're generating back to shareholders in the form of share buybacks, which they've clearly stated are only going to accelerate from here. So we're going to see big earnings growth going forward. And I'm not the only one getting excited. I'll put on the screen right now, they just had a director at the company buy $25 million in stock at the current share price, which should only make Salesforce investors more bullish. I think this was a really important quarter for Salesforce against the bearish argument, because they're definitely not losing any customers, and they're actually only gaining customers because of all of the data partnerships and infrastructure that Salesforce has built over the past 20 years. Their customers are definitely realizing that they'd rather just give their money to Salesforce and have them focus on building that agentic enterprise workforce instead of trying to build that solution in-house and potentially losing market share to somebody who's actually able to use Salesforce today, who's just going to be running off of cheat codes at this point because they're starting to accelerate their sales using completely automated sales agents. Sticking with that theme of capital allocation, they also just completed their acquisition of Informatica, which is going to be very tailored to that whole build out of the AI data infrastructure. And I think you're only going to see more acquisitions like this and other sorts of tuck-ins that are just going to help support the capacity needed to run such a powerful tool such as Agentforce. They blew Wall Street completely out of the water this quarter. If you look on the very top right-hand side of my screen, they beat EPS estimates by over 13%, and EPS continues to only go up over time, as we just talked about their growth drivers from Agentforce and the fact that they're buying so many shares back. I think the move is just getting started as the bearish argument continues to erode away as they continue to come out with stronger quarters going into next year. And if you're still bearish by this point in the video, the chart that I just pulled up should definitely change your mind, as Wall Street just raised their next 4 consecutive quarters in a row EPS estimate, which is just another factor for why the shares had a big pop on their earnings release. Because as the bulls continue to take over and as Salesforce comes out and starts to perform better in the future, everybody who's offsides and thinks that Salesforce is going to go away because they're going to just be taken over by AI is just going to be caught in a short squeeze, and I think the shares will just run bears right over. If we look all the way out to 2030, once again, things just look insanely healthy, growing at pretty much an average of over 10% every single year out until the end of the decade. So I think it's really hard to be bearish at this point. Even if we look at the price to earnings ratio, by 2030, they're only expected to trade at 14 times earnings, which is insanely low for a company competing with Palantir in a sense for that next AI spotlight. So let's take this opportunity to incorporate a price target with all the bullish factors we just discussed. And the best way that I'm thinking about this is with the next 12-month price to earnings ratio, which is that blue chart in the top hand side of the screen, Right now, we're trading at around 20.7 times forward price to earnings, and that's actually below where we were all the way back in 2008, trading at 24 times earnings. And if we compare that to the chart below, which is the share price, when the price to earnings ratio did go below that 24 times, that was the absolute bottom during the Great Financial Crisis. And once again, we're well below that level. They expect sales to get all the way to $60 billion over the next couple of years, and earnings are only expected to accelerate through a combination of Agentforce growth, share buybacks, and AI-focused acquisitions. So it's really hard to argue that we're in some sort of software-specific recession when you see a chart like this and you realize that valuations are just way too low for the estimated growth rates all the way out to the end of the decade. So I'm definitely adding more Salesforce to my portfolio, and I think if they can get to a price-to-earnings ratio of 35 times, which I don't think is very unreasonable if you look back historically. They trade well above 40 times in the best periods on the chart, and I think once they get to a EPS of about $15 per share, we can multiply that and come up with a price target of around $500, and that's going to be, I think, sooner than most people realize. And once again, I think estimates are going to only continue to go up over time, which if I pull up the next couple of years estimates again, that's only reflective of today's prices, and we already discussed that Wall Street has only been raising their targets. $15 per share might even be on the conservative side, because once again, Agentforce is their fastest growing product ever. It's the worst that it's ever going to be, and people are only realizing that they need the cheat code, which is Salesforce. Let me know if you agree with my take down below, if you've been buying Salesforce as well, or if you think there's a better software story out there. Thanks for watching, and check out the other stock analysis videos, which you can see on your screen now.